Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Tuesday, March 19th, 2013. Thank you all for tuning in. Let's jump right into the charts here. We're going to look at the S&P 500 E-mini futures. This is the M contract, means June expiration. Right now, futures are really off the lows significantly, trading higher by 3.75 points to 1550 and a half. Decent little pop here ahead of the opening bell. There is some economic news, I believe, out at 8:30 in the morning. Right now it's 8:28, so we just got a couple of minutes before that is released. But nonetheless, markets are holding steady this morning after yesterday's little decline on the Cyprus news. Today, I don't think we're in for all that much, but it is a start of a two-day Federal Reserve meeting. So the Federal Reserve will start to meet today. Excuse me, tomorrow. They will release their interest rate policy statement. So again, they're going to keep rates at 0%. They're going to say for the foreseeable future, which is forever. So I don't think we should expect anything new out of the Fed. But most likely, it probably keeps the markets buoyant until the release of that news. So that's usually how it works. But we'll see here. The markets are a little bit on the jittery side, and they're so overbought and extended, and this rally on QE3 eternity and all of the money printing going on around the world is a little bit long in the tooth, but either way you slice it or dice it, markets are hanging in there today. So expect, I would say, more of a flattish type tape, just because you do have the Federal Reserve meeting tomorrow, and generally they're not going to move on rates or anything like that. They're not even going to hint it, especially with the Cyprus news coming on. They're going to say that rates are going to stay at zero for the foreseeable future. Who knows what else they'll say? So again, that's really what's going to happen, or at least that's what I perceive to be what's going to take place in this market. The other news is out here that it looks like Cyprus came up with a plan B. Looks like they're going to tax. They're not going to tax deposits under 20,000 euro. 20,000 and over, you're going to have to pay 6.75% up to 100,000 and 9.9% on deposits over 100,000 euros. So that's plan B. I don't know if it's going to get passed or not, but it looks like the Cyprus banks will be closed until Thursday, so we'll see what that does. Right now, you do have the new housing start data released for the month of February, so we'll see how the markets react here. But here you can see the futures trading higher before that economic data, so I'm not sure what's going to happen here, but we'll watch and see how the market reacts. We'll also take a look at gold and oil in just a moment. Looks like February housing starts up 0.8%. Markets are up just a touch. I don't see anything else baked in there. It looks like the markets are just holding steady. All right, let's take a look at gold this morning. Spot gold is down $2 to $1,603 an ounce. Gold caught a nice bid yesterday. This morning, like taking a look at the GLD, which is a good proxy for gold, you'll see it trading around the 155 level. It closed yesterday at 155.38, so little down ticking in the GLD, but spot gold is down $2 an ounce this morning. Oil will usually pull back if the dollar gains strength today. We do have the U.S. dollar index flat on the day, down about 2.5 pennies. Spot crude, light sweet crude, that is what we use here in the United States, that is higher by 30 cents. So let's take a look at the USO. And what you'll see here is that the USO is trading at $33.74 ahead of the opening bell. That's about 10 cents higher than yesterday's close. So oil's holding steady for the most part. Really no problems there from what I can see. Decent little uptick, nothing great. If the dollar catches a bid later today, I would expect oil to pull back, but right now the dollar is so overbought, a little bit extended. The dollar could pull back a little bit more, and I think some money is going back into oil for that reason. So we'll just have to wait and see how it all plays out. Now, looking at the markets abroad, the European markets this morning are all basically slightly negative, with the exception of the London FTSE. They can print their own money. They're basically flat on the day at around 64.60. German DAX is down 0.2%. France is down about 0.5%. Spain is down 0.6%, and Italy is down about 0.2%. So nothing deadly there in the European markets ahead of the opening bell, but none of them are really roaring and soaring. Now, last night in Asia was a big night for the Nikkei 225, up over 2%. The Shanghai index was up about 0.75%, and the Indian Sensex was down 1.5%. So that tells us to look for a weakness in the Indian ADRs today. Look for strength in the Japanese ADRs. Japan is such a joke. Now it's up 1% or down 2%, up 2%, down 2%. I mean, it's just all over the map on money printing. I mean, this is not a sign of a healthy market. In fact, it's a sign of a disaster waiting to happen. So somebody should, knock on the Japanese door and say, hey, this is crazy what you're doing, but this is going to wind up very, very ugly for you. But in any case, it is what it is. Nikkei 225 up over 2% last night. That's really the bottom line. So watch the strength in the Japanese ADRs. There's a lot of upgrades and downgrades in the retailers today. Kohl's Stores was downgraded by, I believe, Morgan Stanley. So, watch for a lot of the retail stocks. They're going to be up and down and all around. You're getting a lot of upgrades and downgrades happening there by these big firms. So we'll see how that all plays out. But nonetheless, so a lot of the retail stocks could be a little bit volatile. We do have a few gap plays today. This morning they'll be posted in the chat room in about 30 minutes. So there will be a couple of gap plays in the chat room today. But overall, the markets right now are holding pretty firm. You can see the futures now trading higher by 4.5 points after that February housing start data was released. I don't think we can make a big deal out of that. The way I think you got to view this market is simply, is a lot of quantitative easing, a lot of money printing is still in place, and that's holding things up regardless if you get some scare out of Europe or not. The big firms will just look at it as, hey, there's still a lot of easy money out here. So again, don't look for a death sentence just yet in this market. All right, with that said, everybody, I'm going to leave it there. I will see everybody on the charts in a little while, and we'll see what this market gives us. But have a great trading day. See you all soon.